Hi, everybody. My name is Paul Gerard. I'm a student loan consultant, and I'm very pleased to be working with the American Dental Education Association, ADEA, to provide you with some information designed to help you do a better job of managing your student loans. This short repayment module is on interest rates and how they work on your student loans. In this short primer, we're going to take a look at some important reminders about interest rates, and we'll also be talking about capitalization. We'll talk about how the rates work on federal loans, campus-based loans, and also private loans, and we'll take a look at the history of interest rates and what they have been doing over the past few years. We'll close this short module with some tips on how to reduce the impact of high interest rates and capitalization on repayment. Now, some quick reminders as we get started in this module. Interest rates on federal student loans have been fixed for the past 10 years. Up until July 1, 2006, they were actually variable. But for the past 10 years, the interest rates have been fixed. And most of the loans you borrow for dental school will be what we call unsubsidized loans, meaning that interest will accrue or build up during school and grace periods, or the 6-month window you have on your loans when you graduate. The AAMC ADEA Dental Loan Organizer and Calculator, called DLOC, which is a terrific debt management tool to help you track your loans, it will always have the current rates available, plus a link to an interest rate chart from the federal government. So some important reminders as we get started with this module. Now, you can't talk about interest rates without also talking about capitalization. Capitalization is where accrued and unpaid interest builds up and is eventually added back to the original amount that you borrowed, resulting in a higher principal balance. Obviously, this is not a good thing, and the less often this happens, the better. Capitalization usually occurs when a borrower enters repayment, for example, after the 6-month grace period on a direct unsubsidized loan. It also happens when borrowers who are using what are called income-driven repayment plans, known as IDRs, you may have heard of these, such as income-based repayment, pay-as-you-earn, or revised pay-as-you-earn. When borrowers are using these plans and they switch out of those plans to another plan, interest can capitalize at that time. So very important that you understand not only interest rates, but capitalization as well. Now, for many of you listening to and watching this module, the majority of the borrowing you do in dental school will be in federal programs, including the direct unsubsidized loan and also the direct plus loan, known as Grad Plus for graduate and professional students. The rates on these loans are fixed, but the rates change on new loans dispersed on or after July 1 of any given year. Once again, once they're assigned, those loans are fixed for the life of the loan. What that means, for example, is that as you go through dental school, you could have 4 different direct unsubsidized loans, and there could be a different interest rate on each one of them. The maximum rate that can be assigned on a new direct unsubsidized loan is 9.5%, and the maximum rate that can be assigned on a new direct plus loan is a full point higher at 10.5%. You will want to check with your financial aid office to see if there is any availability in campus-based loan programs. This is a listing of some of the campus-based loan programs, Federal Perkins, which some of you may have had when you were an undergraduate or perhaps even in a post-bac program. The Help Profession student loans, known as HPSL, loans for disadvantaged students, LDS loans. These loans all carry a 5% fixed rate. They are subsidized, meaning there is no interest charged during school, grace, and any deferment periods. Some schools actually have what are called institutional loans. These are funds directly from the school. The terms and conditions will be assigned by the school, most certainly including the interest rate. So always check with your school about the availability of campus-based loans. Now, if you have any private loans from college or perhaps a post-bac program prior to dental school, or you're considering taking out a private loan, we'd certainly encourage you to talk with your financial aid office about taking out private loans in lieu of or in addition to federal loans while you're in dental school. But if you either have private loans already or are thinking about private loans, the rates can be fixed or variable depending on the lender and borrower eligibility. If you already have loans that have variable rates or you are thinking about taking out a variable rate private loan, be sure you know how often the rate can change and how high the rate can go. You also want to be sure you understand the impact of a rate change on future payments. If the rate goes up, what is that going to do to your monthly payment? You should also ask if the rate will increase after school, perhaps during repayment periods, and if you have to postpone payments, is the rate also going to go up? We talked about capitalization earlier. Very important that you ask the question about the frequency of capitalization on private loans. So once again, whether you already have private loans from college or a post-bac program, or you're considering private loans for dental school, be sure you ask these questions, especially about variable rate private loans. Now, we talked on an earlier slide about how the interest rates work on federal student loans, including the direct unsubsidized, which is sometimes called Stafford, and the direct plus loan, which is also sometimes called Grad Plus loans. You'll see what the rates have done on these loans since the 2013-14 academic year. Notice they went up slightly in the 2014-15 academic year, but came down the next year. And as of July 1, 2016, the rate on new direct unsubsidized loans has gone down again to 5.31%. And notice Grad Plus is at 6.31%. So the rates have gone up slightly one year, but have come down the past 2 years. And one takeaway from this, always notice that the direct plus is a full point higher than the direct unsubsidized loan. Now, as we close this short module, we're going to share with you some tips on how to negate the impact of high interest rates and capitalization. First of all, perhaps the obvious, never borrow more money than you really need. And just because you can borrow up to the full cost of attendance at your dental school with a combination of direct unsubsidized and direct plus, this is minus any other aid you're receiving from the school, that doesn't mean that you have to. So never borrow more money than you really need. If there's any way you can do this, pay the interest on unsubsidized loans during school or grace before it capitalizes at repayment. Very difficult to do. You're going to have to find someone who can help you with this, but that'd be a great way to minimize or completely eliminate capitalization at repayment. Target any voluntary payments, perhaps a voluntary payment during a grace period or additional payments over and above the minimum payment requirement under any repayment plan you have. If you make voluntary payments or additional payments, be sure those are applied against your most expensive loan. Remember, you're going to have different loans at different rates, and you can work with your loan servicer to target additional or voluntary payments on your most expensive loans. And use an aggressive repayment plan if you can to help shorten the repayment period and thus reduce the overall interest cost. The best way, or one of the best ways, to reduce or negate the impact of interest rates and capitalization is to simply try and pay the loan off as quickly as possible by shortening the repayment period. We hope the information in this short interest rate primer will help you do a better job of managing your student loans as a dental school student and graduate, and we wish you nothing but the best of success in your dental school careers.